there was literally every kind of uncertainty. We started with, the gas shortages coming out of the war, and then moved into labor shortages, and of course, a kind of unprecedented commodity inflation that we've kind of gone through. So you literally had a moment every day. So it's hard to capture 90 days of moments, but I think we came out of it good. We're feeling good about the fact that all the three key segments had a good volume growth. The SUV grew 15%, the tractors grew 18%, and the LCV grew 20%. So, all the three segments had a strong volume growth and a decent overall growth in PAT as well. For the auto, it was 21% PAT increase, and for tractors, it was 15%. So, in the context of everything that happened, we feel good about what happened. We also had two interesting announcements, which of course you've covered. Day before yesterday, we announced the spin-off of the trucks and buses business from M&M and merging it into SML Mahindra, as it's now called, which I think will be really strong for us to create a new CV entity, which just the combined entity takes the revenue of that business to 6,000 crores with a 6% market share. So it makes us a kind of serious player in that segment now. Also, late last evening, we kind of, we have this last mile mobility business, which is the electric three-wheelers, which has seen a very strong growth over the last 2 years. The EV penetration in that segment moved literally over 2 years from 12 to 40%. And we have roughly a 40% market share, and we are number one player there. So we had an additional fundraise now with a new investor coming in who valued the business at 10,800 crores. So that becomes a standalone unicorn. And of course, we're talking about listing it sometime towards the end of 2027 calendar. So it's a good lead-in into what could be a very interesting IPO.
Well, yes, but I'll try to unpack this, and starting off with the margins, right? And what kind of an impact raw material prices have had? How much of that pass-through has already been undertaken? And what's yet to come?
Yeah, so the commodity inflation, like I mentioned a little while ago, has been unprecedented. Just within the quarter, we've had on the auto side, over 400 to 500 basis points increase in commodities. So just to recap the question on price increase. So we took a 1% price increase in January, a 1.3 in April, and a 2.7 now in July. So we've actually taken 3 rounds of price increases to kind of prepare ourselves for this. 2.7 was a little higher than what we normally take at one point of time. One of the reasons we took that is so that we don't have to keep taking price increases. Otherwise it kind of unsettles the market, and the customer is prospecting over a period of 6 to 8 weeks before they finally make their decision. They start with the price and then find out the price by the time they're ready to book, which is not really a great thing for customer experience. So, we kind of said, let's just do this because there's so much uncertainty that you can't keep reacting every month to the way commodities are going. We have had some margin compression, but we think it's very reasonable. We continue to be amongst best in peer margins, both on the auto and the tractor side. We think that the auto Q1 margin we should be able to sustain going into Q2, maybe improve it a little bit depending on what finally happens to commodities. Tractors is going to see a volume impact in this quarter because of season shift, and tractors very sensitive to season shift. So as Navratra moves from September last year in Q2 to this year starting 11th October, that's quite a significant shift. So tractor volumes will skew to Q3 rather than Q2. And that has an impact because operating leverage is a very key part of the tractor business. So we would expect some impact on Q2 tractor margins. But that's happened several times in the past. So when you look at the trend, you know that there is a volume impact that drives volume and the margins, and then there's a commodity impact, and both of these have a play. We typically say on the tractor side, expect a 17 to 19% margin. Sometimes we do better than that if all factors are favorable, as we have over the last 4 to 6 quarters. But typically our expectation of the tractor business is 17 to 19% PBIT margin.
Rajesh, I don't know if it's fair to ask you, but would you say that the worst of the commodity inflation is behind us?
I don't think anyone in the world can tell you that. So,
Other than Mr. Trump, perhaps. Yeah.
yeah.
No, but sorry, just continuing that piece. So you've done 2.5% in terms of price increase. 2.7 is what you said in July.
Average, that's average.
Which should roughly get you to 13-14% kind of margin number, just basis the price increase. Of course, there'll be some compression because of the demand you described in the agri segment. But outside of that, do you believe that normalized margins should start to inch up pretty much immediately, just given the kind of price increase you've taken?
Yeah, so see what's happening, Harsh, is a lot of the commodities are indexed. So the increases of Q1 actually flows into Q2. So you don't see the full effect of the, because it moves with all the quarterly indexed commodities move with the 1 quarter lag. So a lot of the hike up has happened in Q1, which actually starts hitting our material costs from Q2. So you have inventories, you have a 1 quarter lag. So, we have to watch and see how this goes. So we are factoring all of this when we say sequentially we should be able to manage the margin at the same level.
Sure. I want to talk about, sort of the biggest color or performer within the quarter, and that's been your EV business, right? Mahindra Electric. That swung to a solid 10.6% EBITDA margin from what I can see. And e-SUVs are now EBITDA positive for you, even excluding the PLIs. How sustainable is this margin trajectory and this move that you've seen from what, 2.5, 2.6 kind of levels?
Yeah. So clearly what is helping now is that our volumes have gone up, especially with the launch of 9S, right? So when we launched, we were between the two in a volume range of 3,000 to 4,000 a month. We are now in the range of, this whole last quarter, we were at an average of 7,000. So we did over 20,000 volume. That's a big movement up by way of scale. The revenue per selling price per vehicle is significantly higher than everyone else in the market. So, this translates roughly into a 4,000-5,000 crore quarter kind of revenue. So it's now a very substantial size of business. And the fact that we are also localizing along the way. So the enablers are that, localization is kicking in, scale is going up, operating leverage is going up. And demand is positive, especially on 9S, which we've launched recently. 9S, in spite of its price point, is the largest selling electric vehicle in the country in the quarter.
So these margins will sustain?
I didn't say that, you said it.
It's a question. Conjecture.
Yeah, so, the EV momentum is positive, and when EV momentum is positive, then you have a good chance that you can keep a strong margin profile. But we also have to keep in mind that competitive intensity is going up, which is good for the category. Many new players are coming in all the time, and that's an enabler to growth. We've seen just 4 to 6 quarters back, the EV penetration in India in the passenger vehicle segment was just 2%. That has gone up to 9%. We are now at 12% of our portfolio is EV. So it's quite a substantial move up. And new players coming in is enabling that. So it's not like we are the only ones who moved to 12. The market has also moved from 2 to 9.
And you're moving from 7 to 8 in terms of production as well, right? You said you're doing 7,000 a month. Annualized, you'll do what? Nearly a lakh. 96,000 is the guidance, is what our auto analyst tells me.
That's the capacity. So what we basically said at the beginning of the year is we've operationalized a capacity of 8,000 a month. A lot of that also gets impacted by which element of the 3 products you need more of. So 9S, we do have a constraint. The demand is more than what we thought that would be for 9S. So, that has a little bit of a capacity constraint. So we're not able to push necessarily to 8,000 till we unlock that constraint.
Great having you in the studios. Thank you as always,
Thank you so
Rajesh.
much.